G'day everyone, my name's Greg Canavan. I'm the editorial director here at Fat Tail Investment Research. I thought it was a good idea to reach out to Mr. Dinse and get his take on the latest developments in the crypto market. As you know, there's been quite a lot happening over the past few days. We're recording this on Friday morning, the 11th of November, Remembrance Day. So Dinse, how are you, mate? I know you've been running solo on this project for a few months, but I thought you could do with a hand to talk about some of the developments that are happening. It's all going on, isn't it?
It's been a very turbulent time, and I've been in crypto industry quite a long time. And this is probably one of, I wouldn't say it's the worst period, but it's been the most consistently bad news after bad news after bad news. And just when you think it's bottoming it out, which I think we were very close to be honest, this latest setback has just added, more turbulence to the short-term price action. And look, I understand if people are feeling scared or nervous or like thinking, what have I done in this thing? And in these moments, the external environment, the media, everyone piles onto this industry and says it's a scam and says it's a load of rubbish and say you're stupid if you invest in it, and everyone comes out of the woodwork. And like I said, I've been through this probably 3 or 4 times, and this is a particularly bad one, but it's probably no worse than the other times in some respects, in the sense that in the past, in 2014, in 2018, when these things happened, you didn't get the sense that there was the risk that it might fail. There was definitely, especially in 2014, there was this, you couldn't actually see how it was possible to find a pathway to success. And in 2018, there was nowhere near the traction we're getting in crypto in mainstream adoption. And in yesterday's update, I wrote at the end, I tried to remind people of what's actually happening behind the scenes. But we were nowhere near the stage where big companies like Deutsche Telekom or JP Morgan were using the tools of decentralized finance or cryptocurrency technology or blockchain technology. So in one way, it feels bad because the price action, and it feels bad because a lot of people who have been sort of deified by the media as being the leaders of crypto, they're not the leaders of crypto. And it feels bad because those people have introduced the scammiest aspects of the traditional finance system into the crypto industry and made things seem worse than they really are underneath the surface. So in yesterday's update, I did try to separate that out a bit into, what you've got in crypto. You've got 3 different levels, and the crypto industry as it is seems to take the headlines, and that's, made up of some of the worst actors in the space. And what doesn't get enough headlines is the actual technology behind it and the movement in itself. I mean, I never really understand why people can hate Bitcoin so much, given that all it's trying to do is create a neutral money that allows you to take self-custody of your own money and be able to transact freely with it. I can understand people maybe criticizing it in the sense of saying why it might not succeed. That's fine. But I never really understand the hatred for something that is at its heart trying to provide digital financial rights and to everyone in the world, which I think is a net good for society. So
well,
anyway,
you and I both know that it's a threat to centralized power structures in the monetary system, which is reason enough for everyone to hate it. But the reason why I wanted to chat with you, when we spoke briefly yesterday, and from I guess an outside observer's perspective, and I've got a very small portion of money in crypto, so I'm not in any way emotionally involved in this, but I sort of thought, look, this to me almost feels like capitulation low. It feels like this is what bottoms are like after having disappointment after disappointment, months after months, and you get this panic and talk of contagion and liquidity. And I thought, it's worth just getting on and having this chat about what's going on, and you expanded on that pretty well in the update yesterday, but just maybe to talk about it in a bit more detail, because I think it's important that people realize that, you don't really want to be throwing in the towel at this point of the cycle. And lo and behold, last night we saw quite a significant rally on the reasonably benign news that inflation is topping out. Now, if you've been looking at inflation forward indicators, you would have known that inflation was going to be topping out and coming down in 2023. But it just goes to show the sensitivity of the movements in Bitcoin to monetary policy. One day you've got everyone panicking that it's about to collapse, and the next day you've got a significant rally. I think when I looked this morning, it was up nearly 20%. So maybe we could just take a step back and explain what caused this latest blow up and this latest sort of fear in the crypto market.
Yeah, so I tried to lay it out pretty succinctly, and yes, is up there. I didn't go into too much detail, but basically the second biggest exchange in the world, FTX.com, which is run by an American out of the Bahamas, and they've got an American arm and an international arm because of the lack of regulatory clarity in many Western countries. That's how a lot of these exchanges operate. But it's a centralized exchange, and essentially the risk you're taking with the centralized exchanges, and this goes for any exchange, including Binance or CoinSpot or any of them, is you're giving your crypto control to someone else. And what they do with that, it's like giving money to a stranger almost, and what they do with that after that, you don't actually know. It's not the way that cryptocurrencies were meant to operate. It's not how blockchains are meant to operate. Blockchains are meant to be transparent and on-chain. The user is meant to take control over their private keys and their cryptos. And exchanges, while they can be useful for making a trade, I use exchanges to make a trade, but once I make a trade, I don't store my cryptos on an exchange. And the reason I don't is because I was brought into Bitcoin and crypto in 2013 after the Mt. Gox exchange, one of the first big exchanges, went bust and lost everyone's Bitcoin. And 9 years later, people are still waiting to get their Bitcoin back on that first exchange bust. And
so how does an exchange go bust? I mean, it's holding people's coins, and
what FTX did and what Sam Bankman-Fried essentially did was you deposited money with them or cryptos with them. And apparently, so the way FTX operates is they have a separate trading arm called Alameda. And apparently Alameda's trading arm was in trouble. And they, when all those centralized lenders went bust a few months ago, apparently Alameda was in trouble there. So to cover a hole of about $4 billion, they used customers' funds to cover the hole.
Right.
It was basically theft.